Okay, folks, good morning and welcome to Swing Trading Today. This is Bob Desmond, and it is 6 a.m., the 4th of June. Yesterday was truly a historic day in that the triple Qs, the NASDAQ 100, hit all-time highs, and not only do they hit all-time intraday highs, they closed there. And it's beyond bizarre. It's beyond bizarre. We have what appears to be. I mentioned this last night to a couple of members by text. What appears to be, frankly, a coup d'état of a sitting United States president has been going on for years now. We have a media whose sole purpose apparently is to demoralize its citizens. We have a pandemic, and now we have riots in the street. And last night they firebombed our embassy over in Greece, supposedly by Black Lives Matter. We don't know that. We know it was a firebomb. We don't know who did it. And there are riots in the street in Great Britain. It's an attack on Western civilization. And to think that this is all one big culmination of one-offs to just happen to hit at one time, I frankly, I'm not buying it. I just can't buy it. And if I had to hazard a guess, we have paid-off politicians financed by, and certain individuals who go nameless, I don't want to get sued, financed by the CCP. That's my call. And I think that this is only going to get worse. And yesterday was the warning shot across the bow that nobody is paying attention to. And that was the drop in the US dollar and the drop in the US bond market. And I've warned about this for a long time now. Now, once you begin to see the two drop in tandem for any given period of time, that is a loss of confidence in the United States of America. Yet yesterday, we saw the triple Qs make new all-time highs. There's something very, very perverse going on here. And you may say it's the markets looking past, all of this looking towards the future. And I would argue that historically you're right. The stock market is not the economy. But remember that GDP was declining sequentially prior to the pandemic. So what's changed? Besides having over 30 million people unemployed, 1/3 of those people have yet to receive unemployment checks. And you wonder why the people are taking to the street. The ground is ripe for unrest, social unrest, civil unrest. And we have governors that choose to do nothing but appease. And there is somewhat of a divergence that was stronger a couple of days ago. I went over this with members initially on Market Wrap on, I believe it was Monday. And we saw the VIX had broken out. While the markets were moving up higher, the VIX had broken out on RSI. It had yet to break out on price. Now, that negative divergence between the S&P 500 and, I should say, positive divergence, and the VIX, that's the markets sending us a signal, not a guarantee that the markets are going to correct. It's just an indication that there's something aloof, there's something up. Somebody is out there while the markets are moving up higher, they're buying insurance against the S&P 500. So all may not be as what it seems. Now, yesterday, we saw a pullback on the VIX. Again, where did it close? Right at support. The Stokes, which were holding support, have broken down. RSI, however, is holding the breakout point. It has not failed. Perhaps it will, perhaps it won't. This is nothing to trade off of. It's just something to file in the back of your mind. When you're seeing these markets press on to new all-time highs, yet VIX is in a tight consolidation and breaking out on one indicator, you had better keep a half an eye on that indicator to see whether or not, as we did last week, whether or not we're going to close positive on both the S&P 500 and the RSI, at least for a day or two. Because the last time we saw that, and we've seen it recently, the last time we saw that was just before the big sell-off. So let's not ignore these signals by the market. And before we go any further, I'm going to ask everyone, if you could just smash that like button, I'd appreciate it. And tonight is Thursday Night Stocks Charts Live. If you think I'm on fire right now, wait till tonight. Please join us tonight. And what we do on Thursday Night Stock Charts Live is that we review the weekly charts and how we appear poised to close. Now, if you were to pull up the charts for the week last night, well, you'd say, wow, this is an incredible market. The futures are down at current. That doesn't mean they're going to stay down. If they do stay down, it'll be curious to see how we are poised to close out the week. How will we position? So it may be a fairly active day. Check out some comments here. I know Rick Roofing was on earlier. Good morning, Rick. Hopefully you're still there. Chuck, good morning. NY Jets. NY Jets has a comment. Good morning, Bob. I have had a small business and have not seen unemployment. I've gotten a small loan of $5,000. Have had to adapt. Sorry to hear that. It's got to be tough. We rent tents for parties, also sell fireworks. So you're hustling. Hey, God bless you, brother. That's what America's all about. So please join us tonight, 6 p.m. Eastern Standard Time. And there's a link. Actually, there's no link below. I have to fix that. So just hit that bell button to get notified. And more on my conspiracy theory. I'm also meeting on Thursday, not Thursday, Friday with TrendSpider. I have a meeting at 3 o'clock Pacific time. So it's like 6 o'clock Eastern time. So if you have any questions or suggestions, any comments for management there, please let me know. I'll provide feedback. And if you have questions, anything, just let me know. And I'll have their ear. And I'll certainly communicate. I'm sure they'll appreciate any feedback that you might have. So we're looking to increase our ties and our business arrangement because I'm a huge fan of their product. And they're grown by leaps and bounds as well. So good for them. Let's go to the pre-market activity. And while we're bringing this up, let's not forget that today we have unemployment numbers, and tomorrow we have the Pimp Mac Daddy of all economic data, and that is non-farm payrolls. So I mentioned the dollar and bonds earlier, and the dollar is bouncing this morning. If you take a look at a monthly chart, we'll take a look at that tonight. I don't want to bore everybody, but on a monthly basis, I warned about this going into the month. We had closed out the month of May on the dollar at monthly support. At current, we are trading significantly below that support level. That being said, it's very early in the month. For all I know, we'll make new all-time highs by the end of the month. But as it stands right now, it is not looking good for the dollar. So we have a dead cat bounce here. These are 4-hour charts. These will all be 4-hour charts. We rallied up into this 20-period moving average, found a bit of resistance. Are we going to pull back, make new lower lows? We don't know yet. We're not that smart. We'll be looking for a potential higher low and a breakout. But as it stands right now, the trend is down, and there's a good probability that we break support and move lower. Why does this matter? It matters because the buying power, if you think things are bad now, you're seeing a rise in yields. Let's just bring up the 30-year bond. You're seeing a rise in yields as noted by the weakness in bond prices. They're up slightly this morning, but on a weekly basis, the 10-year yield has broken out above significant resistance, and we're at the highs not seen on yields since the week of March 16th on a closing basis. And you may be saying, Bob, that's an indication that the economy is strong, it's growing organically. Give me a break. It's an indication that what you're seeing are bond vigilantes seeking fair value from the Federal Reserve. It's a tug of war. And of late, the Federal Reserve has been winning the week. We'll see whether or not they win it this week, because you're seeing a sell-off in yields, a rally in bonds, usually on Thursday, Friday. We'll see whether or not that trend continues. So bond prices, catching a bid this morning. Gold and silver have been decimated the past couple of days. Here's silver. It's broken not one support level on a 4-hour basis, but two. Now we want to create a new support level. And we'll see if this breakout, again on a 4-hour basis, whether or not it holds. But the path of least resistance on a short-term basis anyway is to the downside on silver. Gold. It too as well is catching a bid this morning. Remember, we cleaned up this chart the other day. We took away all the support and resistance levels of old, created new, and that very same day we smashed right through that support level here like a hot knife through butter. We had a head fake rally, and then sellers moved in. And this is because yields are pressing up higher. And I went over this, I believe it was either on Sunday, no, I think it was last Thursday, that historically, when yields rise, gold will trade inversely. There is a however, and that however is that when you have rising inflation, the two can trade in tandem, because the Federal Reserve is raising yields to fight inflation, yet they're behind the curve. The dollar is weakening buying power, and money is seeking a safe haven, a store of value, and that is gold. I'll go over that chart and the inverse correlation traditionally of the yield, 10-year yield, and gold. However, there are exceptions, and I think we're heading into that environment. So while I may be speaking bearishly at current on gold and silver, I think that there's a mother of all bull markets coming up very, very soon as inflation rears its ugly head. But right now we have a deflationary environment, and even saw agriculture sell off yesterday as money moved into, shockingly, names like U.S. Steel. It's been moving up higher. These are cyclicals. What's the symbol for copper? I always have to type in copper. As a matter of fact, I can just do this. Copper. Here we go, Bob. You're a genius. All right, copper up on the week. Take note of the resistance level where we're at. I know I was asked about this yesterday. We have resistance above. I believe yesterday I said it was 2.55. We made a new daily high yesterday, then we backed off. So we're right at resistance. Just beware. So you're seeing money move into base metals, industrial metals, and move out of precious metals. And this is what you would normally see in an environment where the markets are betting that we've been through a full recession. Hey, Kat, good morning. It's been a while. How you doing? The markets are betting that we've been through a full recession. The system has been washed out, and now we're ready for a recovery. Maybe they're right. Maybe I don't know what I'm talking about anymore. I guess we're all supposed to take our stupid pills and pretend that the Federal Reserve is not propping this whole monstrosity up. And if you think there's a civil unrest now, my God, that we have civil unrest with yields below 1%. Could you imagine what's going to happen if people don't go back to work and inflation rises? What happens next? I'll leave you with that. It's scary. Let's take a look at the NASDAQ 100, which again, yesterday, new all-time highs. Why not? We attempted to short the NASDAQ yesterday. We were stopped out. Very small loss. We took a taste, entered our stop loss, exited because we broke out to new all-time highs. Why are we going to fight it? You know, may we try again? Sure. But we're going to keep those stops very tight, especially now. If we continue higher on the triple Qs, guess what? There's no overhead supply above. So you can have if this breakout holds, you can have a rip your face off rally. So be very, very careful about shorting the triple Qs right now. They've been lagging the S&P 500 as the rest of the market is playing catch up at current. But when the rest of the market, if the rest of the market begins to weaken up, you could bet your bottom dollar to keep this rally aloft through election day. You're going to see money rotate into the NASDAQ 100 yet again because they have the best balance sheets. But I will remind, and I keep going back to this, I hate to be a broken record here, but it's worthy of reminder. Here's Microsoft on a daily basis. It looks like we're going to break out here. This is a pretty chart. In fact, I would put a buy on this on a breakout. That being said, here's a quarterly chart. RSI 90.72. Are we amused yet? If not, take a look at a yearly chart. RSI 92.48. This is the largest component of the triple Qs. However, I think that they're going higher. Crazy. All right, let's check out the S&P 500 and a couple of other charts of the pre-markets. You know, I'm looking at the Russell. I have a lot of symbols up here, so let's take what I can get right away. The Russell's coming off a bit. It's down over a percentage point. The trend is still higher here. So, in all probability, we will retest the support level, either the 20 period or the lower band of support base, and at least make a run in an effort to try to take out prior highs. We'll see whether or not it's successful in doing so. S&P 500, here we go. Coming off over a half percentage point, firmly above that 30-50 mark now. In fact, what I want to do is I want to know the second we break below that mark. Okay. I think there's a great trade showing up here soon, folks. And it's not going to be to the upside. The Dow Jones down a half percentage point, spot on. The same with percentage basis wise with the S&P 500. Natural gas is up this morning. Let's check out oil. The OPEC meeting broke down yesterday, and oil was able to eke out a gain. So that's a tell that we'll probably see, go light sweet, that we'll see higher highs. We're down this morning. Wow, we're down significantly this morning. Interesting. Interesting. Brent is holding up a bit better than light sweet. What else do we want to take a look? Let's go copper. Again, the base metals saw a rally yesterday. Copper did not hold its gains. Steel did. And the reason why I spend time on the base metals is just an indication of whether or not traders are believing in an organic recovery, which is fueled by construction and whatnot. You saw Boeing rip up higher yesterday in anticipation of new orders. I think it's more that what we're in right now is the final month of the quarter, and you have fund managers out there that are light on equities, and they're probably for the right reason. They were very cautious, and normally I'm knocking fund managers, but now they don't want to go into the end of the quarter sending out their statements and not having equities in their portfolio. All right, so platinum, palladium, not doing much here. All right, so the feel for the market is we're pulling back. We had a big day yesterday. I think that ultimately they're going to try to rally these markets back. Will they take out prior highs? We'll see, and we'll review it tonight. The weekly charts, Thursday night, Futures Live. So not Futures Live, that's Sunday night. Thursday night, stock charts live, and we'll take a look at the weekly charts. Let's take some requests. I know that NY Jets, XLF. You're probably going to get an opportunity this morning. If you're bullish the banks, to buy the banks, because I'll go to the chart of the 10-year and how we closed out yesterday. Remember that new trading day? This is an end-of-day chart from yesterday. Note how we broke out. This is a big, big move up. Do we close there? I don't know. But as it stands right now on the week, it's a very, very bullish move here. Let's take these labels off. There you have it. So what I want to do is I want to take my crayon out, and I want to draw my new support level, which is right there. My guess is that we're going to see a tug of war yet again between the bond market and the Federal Reserve. Remember, it's harder, far harder for the Federal Reserve to manipulate longer-term yields than it is short-term yields. And what we might get is a pullback off the highs. If we close above this resistance level here, that's a problem because the Fed didn't win. Yields broke out. They do have a trading desk. And if we pull back next week, do a retest, it holds, that sets the stage for new higher highs. And watch out for momentum to build against the Fed. And even when you take a look at the yield curve, we have new monthly highs. Historically, stocks move inversely of a steepening yield curve. There may be a lag, but ultimately, stocks succumb. So the reason why I went into that and why is that what you're looking to buy does well in a rising interest rate environment. Let's go to, let's first take a look at on stock charts, then we'll go to, big move here, huge move. Huge move. You'll probably get a quick pullback here. Note how this is a weekly chart. Note the 20-period moving average is declining, and we have the 200-period moving average right above. So there'll probably be a snapback pullback, and it's at that time where you need to step in and have a leap of faith and buy that pullback. Just keep an eye on yields and the trend. If the trend continues higher, then the breakout in the banks should continue higher. So we broke out above resistance on a daily basis. We already took a look at the weekly chart. It's moving up. Watch for a quick pullback, and you're going to have to take a leap of faith and open or add to your position. And you have some really good points where you could stop out on the XLF, like on this chart here using a daily chart. If we fail to hold the support level at current, which is at around 20, let's call it 23.89, you put a stop loss right below. If you want to use the lows of yesterday, well, actually the day before yesterday, sorry, the second, right below 23.74, that would be a good place to enter a stop loss. And then add on strength. So opening small position, small loss if you're wrong, add to the position if you're right on higher highs. All right, J&J for CAT. Loving the daily chart here, but let's do what we normally do. All right, so we had a huge breakout in April. Ever since, we're consolidating those gains on a monthly basis. We are up on the month so far. I should say we're off the highs, off the lows of the month so far. The weekly chart looks really, really, really good. Very similar to the daily chart. So we're flagging out here. This is a bull flag setup. Daily chart. And here's that same resistance level. Your Stokes are broken out already. This formation can be drawn any number of ways here. This is kind of a sloppy way. I don't even like it. This is my OCD. There we go. That's better. All right. So I think you're probably going to see a breakout here. I like the setup. I think it's going higher. So I would be fine with opening up a position, then adding on breakouts. And once we break out and through the, at current, let's call it 151.70 thereabouts, once we close above that level, it's going to be off to the races for J&J. Looks really good. You're welcome, Kat. UGAZ. Good morning, Chuck. All right. So UGAZ, I'm just going to go with a daily chart here. UGAZ is telling you a story. The way the market is pricing right now, you're seeing higher yields, which is an indicator historically of an economy that is seeing more growth. So that's why you're seeing your base metals move up higher, industrial metals moving up higher, energy moving up higher. So with nat gas, you're seeing a very, very, very tight wedge formation. We're breaking out in one direction or the other very, very soon. And it may take another day or two, but this is apex of this declining wedge formation is not going to last much longer. There will be a resolution. Again, one direction or the other. Our bet is that it's going to be to the upside. You have RSI daily basis, which is already broken out. Your Stokes are like a coiled spring, putting in higher lows. No higher highs yet. Nothing on the heat maps. So I think that we're going to pop up higher in the next day or two. I'm not loving yesterday's price action necessarily, but I like the price action overall. The reason why I didn't like yesterday's price action all too much, short term, is because we popped up higher and then we sold off. However, when you take a look at the chart on an intraday basis, it was a nice consolidation of those gains. I don't believe it to be a head fake. Yeah, this is like, these Stokes are like a coiled spring. So I like UGAZ. Oh, Chucky Boy Yang, huh? Okay. Yeah, it's about flat this morning. Cat, QQQ, can someone recommend? It's at all-time highs, Cat. I mean, I'm a big proponent of buying stocks or ETFs when they're at all-time highs because you have no overhead supply above. But I got to be honest, you're going to want to keep a tight stop on that trade just in case it's a head fake breakout. All right. Chuck, you saying good morning or you wanted me to go over GM? Just in case. There's a lag. You're welcome, Kat. Kat, I don't know when you checked in this morning. I did review the charts of the Qs earlier, so right at the open. So if you wanted to go to the replay and just turn back and review, you can. TQQQ. What is that? Leveraged ETF putting you along? Ultra Pro shares. I mean, really, it's a bull ETF putting you along of the Qs. The same holds true for this ETF relative to the Qs. Actually, no. This is really... I don't like this. If I'm reading this right, hold on, let me make sure. Ultra Pro triple Qs. The triple Qs broke out to all-time highs yesterday. This thing is nowhere near. This is because of the time decay. These things are based on derivatives. I would avoid this. I don't like the time decay here. I would rather just buy the Qs if you want to get long. Because if it pulls back, you're going to see a magnified pullback. When it begins to recover again, it's going to underperform the triple Qs. You saw the same thing with NUGT. That's why I don't trade it anymore. Look at NUGT. Now, first off, we'll bring up the GDX. Well, actually, we'll use the GDM, which is the ETF for the gold miners. Use GDM. I want to do a video about these leveraged ETFs. I like them for trading purposes. Quick pop. Here's GDM. Since the lows of the pandemic, new all-time highs. Here's NUGT. Talk about lagging. My God, it's criminal. It's absolutely criminal. So just be really careful. All right, with that, folks, I'm going to say please smash that like button and join us tonight, 6 p.m. Eastern Standard Time for Thursday night Stock Charts Live. We'll go over the weekly charts to see how we're closing out the week, and we'll take some chart requests. We'll have a good time. And everybody have a profitable trading day, and I will talk to you soon. Be well.